Hi everyone, welcome to the Climate Confident podcast. My name is Tom Raftery, and with me on the show today, I have my special guest, Stephen. Stephen, welcome to the podcast. Would you like to introduce yourself?
Thank you, Tom. Delighted to be here. My name is Stephen Brittain, and I'm the co-founder and director of a firm called Insurtech Gateway. We're based in London, UK, and we run a venture builder and early stage investment fund to help climate innovators make rapid progress to launch their ideas.
Okay, nice. And you said the company's name was Insurtech Gateway. Does that mean that you have a focus on insurtech?
I know it's given away in the name, wasn't it, Tom? Exactly.
Nothing gets past me, Stephen. Nothing gets past me.
Well, it's said. We interpret the term insurtech, and you're familiar with medtech and fintech. Of course, it's the moniker for technologies around insurance. And so what I've got, before you start blinking and thinking this is snooze time, I think over the last 6-7 years, we've understood the power of insurance and particularly risk transfer models to de-risk projects, to de-risk the outcomes of projects. So actually, we realized that we should be looking externally to sectors like climate innovation to make things happen, rather than internally to the industry. So this is a kind of the latest wave of insurtech. Is how do we enable the world by de-risking, fantastic new ideas?
Okay, so for people listening who might not be au fait, give us a InsurTech 101. What's a typical InsurTech company doing?
Well, one of the reasons it's so interesting is it's very hard to define a typical InsurTech company. But okay. If I may, I'll talk in principles and then I can give you some examples.
Super.
So I thought I'd write down how to bluff your way in InsurTech for your listeners, in case you ever find yourself pretending that you've done more homework than you have. And
that's familiar.
What took me an hour to pull together, maybe you could do in 5 minutes. The misunderstanding about the insurance sector is, I think, is most people don't have a deep understanding about how it works. In the same way, we don't understand how electricity really works, or these other aspects. And I think I wrote down 5 things that everybody should know, and I'll try to do it in a couple of minutes for you.
Great.
Is that the insurance sector has more data about climate change than any other group in the world. They have been protecting cities' transport systems from extreme weather, from droughts, from hurricanes, from all the rapid weather events, and from all sorts of other cataclysms for as long as any of us have been around trying to innovate. And it's about some of the insurtechs are releasing some of that data and finding ways of helping that accelerate innovations in new areas, such as ways of enabling communities to adapt to climate change, through to enabling the financing of alternative energy systems like electric vehicles or solar power systems. It's to understand what the prediction of energy conversion is from sunlight, the risk against the utilities that we're trying to install, and how you can create complete business models so you can raise funds. And that a lot of that data lives, and the data scientists who created it live within the insurance community. And so that's myth number one.
Okay.
There's myth number two. I fundamentally believe that when you're pitching your idea for investment, and let's say you've got an idea to put electric vehicles, electric battery, electric vehicle, a solar power project, it could be all sorts of aspects of climate innovation. The thing that holds back an investor decision is risk. It's never been done before. How can you guarantee it be done on time? How can you guarantee the yield of a new technology like this? And all these ifs and buts are all things that can be transferred to a warranty or a guarantee. I found a group with a balance sheet of $500 billion who have said that if I fail to deliver, they will step in and resolve the situation. So this wave of radical new paradigms that are coming to market, I believe there's a lot of people saying, gosh, if only this had been done before, this would be so easy to approve. And I think that by tapping into the insurance market, I mean, in the same way that they're enabling areas like crypto theft and crypto hacking and cyber technologies to be advanced, I think we could do the same thing with climate technology. And it's the willingness of the insurer to step forward and say, I'll take some of the risk, so that the project investor has some peace of mind that this might happen. And if it doesn't, we're not going to lose everything.
Right.
So this is why it's good to have insurers as friends. I'm looking down to my notes, as I warned you earlier. And what I've learned by talking to people in field, and when I say in field, it's particularly learning around flood mitigations and areas around extreme weather, is that the data science of insurance is much more about prevention than it is about resolution. So the old mentality of, I need an insurance product because, if the worst happens, it's because InsurTech is so data centric. It's much, all those things that we hear about, predictive technologies, predictive data, AI. Now apply that to risk and realize that what we can really do now is warn a community that a flood is coming, that a hurricane is coming, to the point that in community can respond. We can warn a car, we can warn a motorist that their battery is about to fail. We can warn a telegraph pole that it's about to have an impact with a truck hitting it. I mean, I'm playing this ahead to all that thinking about when you can see the future.
Right.
You can then respond in a different way. And the data, the deep, rich data now being made dynamic in InsurTech means that most of the smarts are done before the event happens. Meaning that the equation is actually much less now. So we're backing businesses that are educating people about flood and drought, to the point now that the amount of capital required to cover the actual risk in the event of a real loss is so reduced that it's made it accessible to groups who've never been able to get protection before. So the smarts are in prevention.
Yeah.
So I hope to share a couple of examples with you on that in a moment. And at the tail end of disaster, recovery and restoration is similarly has been. So back to a lot of my examples are in mitigation because they're more advanced in our portfolio, but we can talk about other things at an early stage later. But equally, when you know that the flood is here or the hurricane is here or whatever the catastrophic events come through, you can be ready for rapid implementation.
Mm-hmm.
And we've got, so a typical, and the anatomy of a major flood, you get 6 hours notice, there's complete destruction. And then, there's a whole displacement of people. And then you start to see the humanitarian cost. You see the breakdown of local economy and business. You see the problems of water. You see the inability of an economy to return. And what that needs is speed, not protection. It needs, in 3 hours, we were there. So the automated payment systems have been proven in many cases to be more effective than aid systems. That NGOs being there in 48 hours, an insurance system can be there in an hour and can have deployed capital and readied immediate response. In fact, they could do it as the wave hits. They're already dispersing funds in an automated reaction. I mean, This stuff is phenomenal when you see it modeled. And we've been supporting some of the pilots that are looking at rapid, prevention and rapid response. And I believe a lot of those principles can be transferred to many other climate sectors.
Okay, cool.
And I've gone rather intensely into my list. So the last one, you'll be pleased to hear, the last thing I wanted to share is to be a catalyst for cheap lending. And this is something I wish I knew more about, but it's very easy for you and I to get a mortgage on our homes. In the simplest analogy here, because our property's value can be defined and agreed with a bank. Mm-hmm. We can get that insured in the event of building insurance will protect a lender against loss. And we can go to a bank, and this might be a bad week to suggest this, but you can get a pretty affordable loan to the point where we might have up to 90% borrowed on our asset. Other countries, particularly developing world, don't have any of these luxuries. So a farmer in Africa or India can't borrow 90% to buy a farm. They just can't do it because they don't have anything like this structure. But in there is that thin layer of risk transfer. It's the insurance product. So I believe that, and more than I believe, I'm supporting pilots of groups who are helping smallhold farmers ensure their yield, ensure their crop, ensure their tractors, their herd. And then they can, on the back of that, they can say they've got an asset that is recognized and in theory can go and then attract cheap lending. So instead of going to a local loan shark and paying 50% on their second daughter to get their farm away, they can get this at a reasonable price, and they can start thinking about augmenting their equipment, their new filtration systems, and new planting systems, and new tractor, because they can borrow. And I think that's been greatly missed in the equations of how do we help the world to be more adaptive to climate, is that we have to help them better define their assets, protect those so that we can then access cheap lending. So those are 5 sort of trump cards of why climate innovators should spend at least this podcast and some time after it to work out how risk transfer, insurtech, and the insurance market can unlock their own mission.
Fascinating. And how are you helping them, Stephen?
There's only so much we can. So this is so big. I walk away with a fizzy headache of how big this is. So most humbly, I just found a simple place to start. So we run a venture building studio with a small investment fund. And that is really tailored towards the small team innovator. So that would be typically this is either somebody who has a real deep domain expertise. So they could be somebody who spent many years trying to help smallhold farmers. They might be developing electric battery softwares for, managing those within an electric battery team. And it's dawned on them the limitations of chemistry and engineering. And they need to think about finance and risk transfer to make this work. And that's generally the type of person that comes to us. So they either come as I'm stepping out of my day job to go and see if I can come up with an insurtech product that will accelerate this category. Or they're in postgraduate studies because they thought that was the only way to unlock this, is to go and learn some more. And they'll come to us and we will behave like an early stage investor. We will give them a period of time. We make up these terms as we go, but an entrepreneurial residence or a pre-seed investment, you can imagine everyone's a slightly different shape. Sometimes they'll come in with a distribution partner and say, I want to work with this group in this particular science. Can we form a venture-backed business together? And I think that's the key to it, is to use the fast-tracking power of small teams backed by venture to go forward. And our commitment to them is that we will help them refine a scalable product, a piece of software that's wrapped up as an insurance, either a risk transfer product or risk modeling product, that we can then take to the venture capital market. So our venture capital fund will probably be the lead investor on that to get the catalyst. Right. But to put it into context, we've been running now for 6 years. We meet 600 innovators a year. We select about 10 a year, of which 6 make it through, and through that early study, can we do something together? Can we go fast together? We will invest. We've now invested in 17 businesses from our funds, and they now have a collective value of $500 million GW, sterling, and are now working with much larger VCs than us. I'd love to say that we were just a catalytic funding, but we put them on the path to attract venture capital funding. Okay. So we call it a gateway because I hope it's a way for climate innovators to see a way to access this new stream of underwriting capital and venture, but equally for the insurance and venture market to see a way of engaging with climate innovators.
Nice. And can you give us some examples of companies that you've helped? What kind of space are they in? What are they doing?
I'll do it in order because I'll get confused otherwise. But it probably speaks to the emergence of this overlap between climate innovation and if that works for you. So it'll sound less dreamy and it'll get more and more complicated as we go. And don't stop me along the way, of course, because I'm clearly over-caffeinated this morning. So the first business we got involved with, late 2016, 2017, they were called Flood Flash, and they identified a very clear problem. And I alluded to parts of that story earlier, in that they recognized that although many businesses and local communities had flood protection on paper, the reality is that they wouldn't see a settlement for 3 months. And by then, 95% of all businesses and local communities are gone anyway. The reality is that doesn't serve the purpose of sustaining and giving resilience to communities. They said, we need to have this fully automated. And they were very clever. So you know the term IoT, I'm sure that appears in climate innovation as well. They had sensors that they would plant in a given environment. So it could be outside a small factory anywhere in the world. And once that sensor gets wet, it pays out almost instantaneously. So it gave, so that scenario with two guys who really understood the data behind it and had worked through the modeling side of it and wanted to launch a direct-to-market insurance product. And we recognized the superb opportunity to fast-track, to productize what looks like a load of financial contracts turned into a physical product for a world that doesn't need to understand it too much. It's just it's a stick I buy, I put it in the ground, and in the event that it floods, I just see money land in my bank account, and I can save my staff, save my business, find a place to reopen and get going. And it made perfect sense to us in a climate-centered view on innovation. And so we supported them financially and put our reputations behind them, said this is worth backing. We gave them a place to work and some contacts to build a prototype. And, so 2 years later, they were then able to attract the world's biggest insurers behind them. And because they had been through a phase of proving that it would, imagine all those things that need to be proved. Like, when people tamper with it, what if I throw a bucket of water over it? Won't I win the lottery? And all those things that go through every investor pitch. Surely this is too good to be true. That all needed to be worked through. And that, we helped them work through that, gave them the time, the space, and the team of people that could help answer some of those questions. And our fund invested in them. And but interestingly, their first investors were a group of maverick angel investors, early stage like us, followed by a couple of generalist VCs who had an appetite for insurance. And this 2016, 2017, remember, climate was still a new thing. They were all talking about cryptocurrency as the new thing then. And then came the first impact investors sort of 2 years ago, who recognized that this could have far greater relevance to advancing climate innovation. So that's it's taking me too long to tell you these stories because they're so also fascinating. Mm-hmm. But it's a mastery of recognizing that what the customer needs is speed of recovery. Yeah. And what they didn't want to have a conversation about was IoT devices, 3-dimensional pricing, satellite data, and nobody wanted to hear about it. They just wanted to know, will I get my farm up and running? And I think that's the smart place to be in these innovations, is to put everything behind that. More recently, I won't go into, how are we doing for time, by the way? Is this too much depth for you?
No, you're fine.
Okay. More recently, we supported a business called IBISA, IBISA, and they protect smallhold farmers, and particularly in developing countries. So their pilots have been in the Philippines and India, Ghana, and they had a couple of really, the utility layer of what they're doing is very clever. They enable us to distribute basic insurance to all farmers, whether they do it at the point when people buy seeds, when they buy tractors, when they're talking about learning about farming. Somebody's there to help them understand the power of being protected. 75% of the world's food supply chain is unprotected, which is extraordinary when you think about the vulnerability to extreme weather events now. It's a crisis over the near horizon to not get these groups protected, to be able to bounce back. And they had found cheap and effective ways of making distribution work. And once they got that bit going, then the product stuff started. And the product stuff is where it's really happening. So anticipatory finance is the new term that many of your listeners will be more familiar than my regular conversations with the insurance sector. But the idea that we will put money into the bank accounts before a disaster happens is extraordinary fraud before the lightning strikes, before the hailstone falls, that these farms are able, or these local communities are able to have a response plan ready. It just doesn't work with the insurance model. But they have been piloting that through different kinds of funding sources. So using the insurance risk model, but then using funds from the World Bank or the European Space Agency or different grant groups running through risk transfer models. So it's a bit of science from one group deployed to the funding of another. They now protect 200,000 independent farmers via various distribution channels. And every week I talk to them, there's another innovation. Last week's meeting was about cows get too hot. What can we do about it? And I said, well, what's the implication? And they said, the milk goes bad. And I said, how much milk goes bad? And I wish I could remember the numbers, because this is the time when you need numbers. But it worked out something like 500 times the UK consumption of milk every day in India gets spoiled by hot cows. And so you realize the scale of this.
Agrivoltaics could help out there.
Yes, exactly. I'm sure your listeners have got many other solutions for that. Mm-hmm. But so when as ever, when an engineer looks at a problem, or a chemist looks at a problem, or a risk transfer person looks at a problem, the risk transfer person might say, well, let's find a way of. Surely it makes more sense to put up a shelter in March. Sorry, I've got a northern hemisphere view on weather. But in the milder climates, when the weather is mild, let's put out some shelters, because we know we've got the UK consumption of milk going to be spoiled every day unless we do something about it. If you see where I'm going. And that anticipatory finance is a risk transfer model being sort of hot wired to work in the climate innovation space.
Right. Yeah.
So anyway, I'm very keen to meet co-investors for that business, because that's in that phase I mentioned earlier, where it's been through the modeling. It's got some serious results now, scalable results. It'd be great to sit next to now some groups that invest more at an in-field or in-market scaling, because they've got something, I think, that's been through pilot, and it's now, so how do we roll this out in India? And that's quite a different different culture of money that would sit with a group who've done the product and modeling, to then go, right, let's start thinking about rolling this out through our partnerships and people we know.
Yeah.
There's probably a theme in this, that I will be learning over the months, and Tom, any insights from you and your audience about how we start to align our different investment cultures, because I think they're very different, and we've got different values to play. Would you like another example?
Yeah, go for it.
Okay. It's under your brow of your Panama. I can't see your eyebrows. Normally that's a clue of whether I'm talking too much. Key to Earth is one of our more recent groups, and they came via an accelerator to us. So we met them through a group called Carbon 13, who attract innovators at a very early stage, almost pre-teen. And they were a group of data scientists who've been looking at the future of the carbon offset market.
Right.
And they recognized, like many innovators do, in that state, that here's a market, it's a bit Wild West, and I mean this in the nicest sense, in the same way that we talked about the cryptocurrency or the digital assets market, or the various sectors that are in this rapid emergence. But there's a lot of early adoption in there, but the majority of us are a little bit timid to get involved.
Yeah.
And they recognized that for this market to be bona fide, it needed something like a warranty or an insurance product to wrap it, i.e. the best carbon credit is an insured carbon credit. And in doing so, it wasn't just a blind, let's just insure the thing. But all the data and the thinking and the understanding about where this market's going, and all the problems that we could see with it, that we could put a sensible price to protect that carbon credit, so that in the event that these carbon credits fail to mature, whatever might happen, the trees don't grow, they get a pest, they were never there in the first place. I mean, I use the example of trees, but whatever it was, or the technology that we were all banking on didn't deliver the alternative energy or the sequestration we hoped it would. In the event that doesn't happen, which in a field like this is pretty long, there's a big long tail to this. There's a long tail to it. That the key to Earth would have a better sense of it than anybody else, and that the insurance market would be willing to get behind that and give that whole market a chance to accelerate from being a market tailored to early adopters to one being around institutional investors and the later majority who just needed to see greater protection. So I'm particularly excited about that as an example, because that very swiftly follows people saying, what about biodiversity credits? What about this other category that's emerging, that's almost, that's got all the kind of, it's in that tissue stage. Can we, by having that risk transfer thinking, that, warranty, those kind of structure, having an insurer brave enough to come in on something with a very long tail of, big, long risk curve to it. We can get somebody behind it. We can start to really think that meeting a goal in 10 years is possible. Because without it, we'll all be saying, wasn't that a great idea? It's a shame we couldn't get somebody behind it.
Yeah. I'm curious, Stephen, you said you're meeting 600 companies a year, of which you select 10, of which 6 get through, if I remember the numbers correctly. What are your selection criteria to get from 600 to 10? And then what happens to the other 4 from that 10 to narrow it down to 6?
I can give you a really standard early VC answer. So I'll give you the mechanics of it. But the early stage is a conviction investor. There's never enough proof. You just have to like it. So that generally means that you have to really like the people, where they come from, who they are. And so is their purpose and is their background aligned? So I generally, if the person's right, or the small group of people are right, they have some domain expertise and they're pretty committed to solving a problem, then I'm pretty sold. And I say I'm maybe more of the person decision maker, because the people I work with are far more technical than me. I've got insurance partners and I've got investor partners in my team, and they might have use a slightly different part of their brain. But the general first point is, do we want to spend 10 years with these people to help them on their mission? Because it's a 10-year commitment, something like this. So it's so important to get the people piece right. And we have, and I have to say, I look across the portfolio and all of them are 26 founding teams, are extraordinary individuals. And without a hesitation, I would sit on a 5-hour train ride and I would get off that train feeling smarter and inspired than before I got on it. So that's the bar, that they're just really passionate and going to do it. And then, of course, you get into the product and market, the second 2 points. And I don't mean to be dismissive, but it's so hard to get that first one right. But can we come up with a product together? That key to Earth story of the carbon credit meets warranty was a sort of a chemistry moment between us all in a room, and said, we think we can make that product launch, and we think we know how to get you into market. So there was a sort of product magic that happened there. And the market thing is generally just, is it big enough and is it now? The market, it's a timing and size thing where, and generally you can look to an analytical consulting team to give you an answer, or read a report and find a statistic that says generally everything's got 7 zeros behind it, being a billion or a trillion. So generally the market sizing is never a problem. It's just, is it now? And the wonderful thing about climate innovation is kind of everything's now, isn't it?
It's yesterday or last year or the year before, a decade ago.
So So I have sort of less of a problem with the market bit. I mean, many innovators have misunderstood what the market is asking for.
Yeah.
And I think that's one of the challenges. I was at a seminar last night. I met a number of founders, and there were an awful lot of assumptions of where the market decision making was relative to where to start. Proper market need. There is enormous void between what the carbon credit market can promise and what it can deliver today. And it's big enough to launch a massive venture-backed startup today. There is a flood response problem, and has been since the dawn of civilization.
Sure.
And only now could we crack it. I could make a clear argument about timing and market size for both of those examples. And I guess the fourth thing is, I mentioned the 10-year thing. We just got to really like it. And the joy of talking around, putting confidence into climate businesses is pretty hard not to like this stuff.
Yeah.
I mean, it's generally really fascinating, and it makes you realize why you spend so much time learning your trade is because you can really help solve real problems. So I have less of a problem. I've never had such an easier fourth decision. Do I really like this? It's been trying to convince myself not to do everything. So the problem we're going to have is the more climate innovators that come through the front door, if we can find a product. And I think we're learning, I'm hoping some of these examples will be informative to help either identify with people or get them thinking. That I hope we just have too much to do quite soon. And that will be a lovely problem. But there aren't enough coming through that funnel just yet.
Okay. Well, hopefully we'll fix that. Where do you see yourselves in 5 to 10 years? What's the longer term plan?
I'm obsessed with progress. And so I'd have to be looking back on this period of time and saying that we actually made this stuff, we got the stuff into market. So I'm standing, and there are 30 or 40 high impact businesses that have, I don't like to use the term unicorn because I think it's too growth money markets focused, but I'm standing in front of a portfolio, with my team.
Maybe we redefine unicorn. Maybe we redefine unicorn in this space as being a gigaton.
Yeah. Okay. Yeah. Okay. So we've got a series of gigaton businesses that have, and because I always see the challenge of getting there, in order to have become that, probably unlocked, 10, 20 billion of underwriting capital, have unlocked 10 billion of venture capital. And I see that line ahead of me today. I see that, we have unlocked 500 million of underwriting capital and 500 million of investment capital. And we're doing the right thing. I just need to make sure that quality stays in everything we do, because I think we're in an area of such growth and such need that we just don't mess it up. Just keep attentive to good founders, and keep their journey, de-risk their journey. So where do I see myself? I guess I hope that this new frontier of risk meets climate is more established. I spend less time being an activist and an educator. I mean, in the lightest, I realize how light this stuff is that I've been able to share with you, but that I think that a more established relationship is here in place, and more of a platform is in place, and that I can spend time with people with great ideas, and because some of the harder things, this stuff is hard enough, just getting through the mechanics of this, I really, like I said before, I'm most passionate about founders. So in 5 years' time, I feel that there's going to be such a need to coach and give confidence to people. I mean, hence when we spoke last week, climate confidence. We need to give confidence to climate innovators. But that was a very long answer to your question. I wish I'd rehearsed it more. I've in 5 years' time, I've given confidence to climate innovators.
Nice.
And that's our measure.
Fantastic. Left field question, Stephen. How did you get into this space?
So I was a product designer.
Obviously.
Mechanical engineer, product designer. Right. And I had lots of big ideas. The kind of moonshot idea was never a problem. It was always trying to work out how to get it to market. So I guess through frustration, I worked with, and I was lucky to work with some very big innovation projects. And I think it was a realization that as much as I could design out the stupid of many products, the ergonomics, the safety instructions, the things that made people understand this new paradigm, this new mobile phone, was how to use it and how it all works, and all the things that product designers usually worry about. It was when I kept banging into risk transfer, the bigger my ideas got. And I thought, well, if I'm really going to be an innovator, that I'm not going to, meet my own potential, I'm going to have to get my head around this. So the breakthrough for me was I spent a year talking to people who said, how do I unlock this problem? I can't get big ideas to happen. I can't get people to back my ideas. And they said, have you thought about talking to people in the insurance market because they de-risk ideas? It was a friend that said, meet this guy. So I met this chap called Robert Lumley, who's my co-founder of Gateway. Or I'm his co-founder. I shouldn't be so possessive, should I? We co-founded the Gateway. in a kind of moment of chemistry of, I'm a frustrated innovator that has had big ideas and can't make them happen. And he's, told a story of, sort of removing the barriers of regulated markets and accessing capital. The hot knife through butter. This started as a conversation. We went for a walk around the park, and sort of 3 laps of the park later, we decided to set up a business together and thought there's something in this.
Excellent.
And that was it was a breakthrough moment for me of being the sort of slightly I'm still restless, but the restless innovator product designer meets somebody who can help unlock the route to scale. And we've sort of put our heads together ever since. I've had as one benefits of one, not scare the other.
Nice. Yeah. We're coming towards the end of the podcast now, Stephen. Is there any question that I haven't asked that you wish I had, or any aspect of this we haven't touched on that you think it's important to make people aware of?
Nothing too specific. I mean, I'm conscious as we've spoken that I've referenced a number of ideas in the mitigation space, sort of, catastrophic weather events. And I've mentioned new spaces like KETA and the carbon credits protection. I'm hoping that I give the impression to your listeners of our openness to look at the most advanced fields in net zero goals, climate goals, sequestrian projects. I want to tell your audience that we're open and listening, and we are meeting founders from electric vehicles through to problems with crop harvest in Namibia, and that they all belong in that, where we want to go. But I think there's another conversation I'm hoping to have, which is around we might be willing to back us in that product development piece where our expertise lies. But I really feel the value of us aligning with a climate investor, somebody who can see that, rather like the way I described the relationship where I met with Robert in that kind of a one unlocks the other. I think that a climate investor sitting alongside us would be an incredible partnership. And I haven't quite found a way to make it work. We're all learning together. So if your audience sort of might have people who are already looking this way, I'd be delighted if somebody could, bring that to us. I'm so open to try and find a way of making the product piece work with the pilot and implementation piece. So that's a call for help.
Lovely.
So any other way.
If people do want to get in touch, Stephen, if people want to know more about yourself or any of the things we talked about in the podcast today, where would you have me direct them?
I think probably the easiest way is in the show notes. We'll include our website address, insurtechgateway.com. You can follow us on LinkedIn, and we keep that updated with all the latest projects and applications for new cohorts. In fact, we've got one. We're closing a deadline on July the 5th for the next cohort of climate innovators. So if you're close and you want to get moving, or at least this is a chance to get talking, then go to our website, go via our LinkedIn, or look at the show notes and let's talk.
Super, great. Stephen, that's been fascinating. Thanks a million for coming on the podcast today.
Thank you very much, Tom. Really enjoyed it.